Check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
I can hear you loud and clear, Coach Jay. I won't say the obvious. Another wild day and another wild month and another wild year. How did everybody work out today?
Let's see it. Welcome to At the Buzzer, everyone. Our market recap. It was a pretty wild day. Wild day in the markets for sure. Headline-driven markets as they have been. We are continuing to see, headlines come out of the Middle East, whether they be escalations or de-escalations. We will see, but it was a pretty good day for me overall in trading. Took some trades during fast markets this morning, a couple other trades after I got off the show. Shout out to BPC in the chat. What's good, Braden? I wonder if Braden took that long that you were talking about when we were on air. Turned out to be a pretty good trade. But welcome to At the Buzzer, our market recap, everyone. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before. We believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. I'm Coach Jay. I've been a Topstep performance coach since June of 2023, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 23. I've been involved in the futures trading industry for 4 decades. I'm here to share some of my experience, some knowledge, and hopefully help you become a better trader.
Awesome stuff. Thank you for that, Coach Paul. You are all our chat, our audience. We appreciate you all being here. Let us know how you did in the chat. Were you up on the day, down on the day? Anything that you learned from the day? Did you stay out of the volatility? Anything that you learned from that volatility? We got Knox in the chat, ended green on my XFA. Pretty happy, up $100. Nice job. Was a great trading day for Brian. 9 out of 10 trades. Brad Sims in the chat says my account is unwell. Usual. I blew up. We won't name those accounts, Sleepy Mocha, but just trade a couple with us here. Trade a couple accounts with us here at Topstep. You can still use the code AlexGold for 26 off a Topstep combine. But whatever you do, whatever accounts you're trading, and make sure you manage your risk, right? Especially on days like today where the volatility is increased, risk management over everything. Shout out to, we had a trader on the live leaderboards today. Shout out to Tyler. Made 128 grand in a Topstep live account today, which tells you the possibilities that this market presents, but on the other side of that, there is risk as well. So we got to think risk management over everything. You can't make 128 grand if you don't have an account to trade. Let's take a look at the news. As far as planned headlines go, we did not have anything really on the economic calendar this morning. We did have not too much, right? Chicago National Activity Index came in at negative 0.11. Forecast was 0.16. We had Myron speaking as well. No real numbers, big numbers out. We did have a bunch of numbers come out last week. Later this week, we got S&P Services PMI, manufacturing PMI numbers coming out. We have crude oil inventories, of course, jobless claims, and Michigan sentiment final on Friday. We did have some bigger numbers last week, so those are kind of out of the way. But of course, the unplanned headlines are what is really moving us around, right? Prior to the market opening up this morning, we did have the president say that he was going to put a cease to any attacks in Iran for the next 5 days, and is looking to come to a deal with Iran on the war. But kind of conflicting headlines that we got all day, right? We got from Iran that there were no talks with the president. So we will see. Whatever side you stand on, what it is showing us is that there's volatility in the markets. The markets are looking for headlines, and those headlines are going to move the markets around. Anything you got on the news, Coach Paul?
Yeah, these headlines, planned or unplanned, planned for the unplanned. In other words, if you enter any position without a stop, you're risking your whole account. I mean, it's right there. When we go through the moves that surfaced on that one headline alone, if you don't have a stop, you're done. So coming into that planned, unplanned, it's lurking around the corner. When we talk about capital preservation or limiting your loss, that's what it is. Even with a stop, you're going to suffer some slippage in some of these markets. I can't say it enough.
Yeah,
You need to protect yourself, and
for sure.
you need to go have smaller size and controlled risk.
Absolutely. Risk management is important over everything. We know the markets are going to move, right, on these headlines. But again, you want to be careful about chasing that volatility. And I say that as somebody who is a momentum trader and welcomes some of that. If you don't know how to manage your risk in this volatility, we've had a couple of experiences with it now. All of tariff time last year, right? If you've been trading for more than a year, you're accustomed to these markets, and this is the environment that we're in: increased volatility, increased opportunity. But we got to think risk management over everything. Man Cave in the chat says we have all the tools, we got to use them. Absolutely. You can see I use one of the tools today. I was up decently on the day and said, you know what, I'm going to continue to trade if I see trade opportunities, but I'm not going to give back more than X amount for my P&L high. Shout out to the Topstep X risk features for locking that in. Let's take a look at the quote board. We got 36 different markets we can trade with Topstep accounts. Today, to the downside, we had RBOB gasoline futures down 8.88%. We had crude oil crude oil down 9.55%, and heating oil, our biggest percentage mover to the downside, down 9.96%. To the upside, we had copper up 2.12%, the Russell up 2.27%, and the Nikkei, our biggest percentage mover to the upside, up 3.7%. To talk about our big four, we already mentioned crude down 9.53%. We had the S&P up 1.14%, gold down 3.59%, and the NASDAQ, rounding out our big four, up 1.3% on the day. Of course, most of that move happened in a couple of minutes here. And then we had a range-bound day, which was a very interesting day to trade. Let's take a look at the daily to start here on the NASDAQ. What are we seeing here, Coach Paul?
Now we're seeing we didn't close above the 200. We had a actually I would call one swift move. Um, we didn't we didn't even get above Friday's high.
We looked
Am I
above it.
saying that?
We looked
We
above it.
peaked above it, but we didn't close above it. Is what I meant to say. Yeah.
Correct.
Um, Now it could be, we were under Friday's low, above Friday's high, but we didn't hold that. So it had a possibility of being engulfing, but the body of that candle is kind of a failure. Um, this is classic bear market rally, lit by I'll call light volume, because the size of the rally was was not in comparison with the volume. Um, because the news came out, what time? 6 o'clock
Correct.
Central Time. Maximum exposure for a headline like that.
Right.
So while it was a bullish day, there was a poor closing. We'll see tomorrow if we can get above these highs, but that wick is very concerning. We're still under the 200. The 200 is still going higher.
Yeah.
It's still ticking higher. So the more time we spend under this 200, I believe the bigger this break could be. We did have the 20 close under the 200 also.
Yep. Yes, we
So,
did.
sometime this week we could have the cross, the death cross. We'll see. But nice. It was a nice bounce, but really didn't follow through.
No follow through. Really huge range today in the Nasdaq. Of course, daily ATR 549 points today. We had a 993 point range, and of course, most of that came in a short period of time. Let's take a look at the overnight session. We're not going to talk too much about the overnight. Really wasn't much happening. We stayed under the 20 moving average. Pretty consolidated day. And then, of course, we get that headline out that is really the entire range for the day. This 30-minute candle, which was more like a 5-minute candle, was the entire range for the day. There's some interesting tweets and things like that out there right now in the social media space that you can all look at. I'm going to say one thing. I follow volume for a reason. We deal in financial markets each and every day, and there are incentives for whoever the market participants are in these markets. They're incentivized to make money from these markets. If you can find the volume and follow the volume, you have the potential to make money with them as well if we can recognize patterns. Now, I'm not saying that as I recognize this pattern. Today, I was actually getting ready to make a cup of coffee when the initial spike of volume came in. Getting ready to make a cup of coffee, doing my prep for the opening call. But there was a spike of volume that came in prior to the huge move. That was interesting, and a lot of people are pointing that out right now. There's a quote that I live by in my trading: volume moves the market, and today was no different. This spike of volume I'm talking about is right here at 6:50 Eastern time. This 5-minute candle, that was the highest volume of the day until that point. And about 20 minutes after that, we get the headlines that come out that shoot these markets up. So, really no flow. And again, I'm not saying that as, hey, you could have caught this move to the upside, but oftentimes there are signs when, you know,
beforehand.
things may be happening. If you want another example of that, look at October 9th, 2025, before the huge spike. And somebody, if you want to do, a little bit of investigative discovery, look at there's a 5-minute candle about 30 minutes before the huge spike. It's very similar. That's why you don't use VWAP for confirmation. TSAV, I do. Again, we say it all the time here. VWAP is not on its own an entry or exit signal, and a lot of people think that it is. I think what VWAP may have been telling us prior to that volume coming in was that there was really no direction in this market. VWAP was relatively flat, and what that tells us is range-bound market, which might be telling you if you're going to trade it to buy it down here. Not saying that you would have traded it, but because that VWAP was so flat, it's not really giving us much as far as direction goes, especially that early in the session. Now, of course, we get the headline that comes out here, Coach Paul, and from a structural perspective, and this is why I love volatile markets, what did this market do? It traded up to the 200 moving average on the 30-minute chart. We had a ton of volume, and then we got a retracement back to 50, perfectly back to 50% of it, and then it held. Anything you want to say here, Coach Paul?
Well, in the S&P, all day, the first level of support was 64.93.
Okay.
And VWAP, session VWAP was flat and above that. So at that point, like you just said, it was kind of aimless to downward,
Yeah.
setting off. Why was it? Concerns. A Friday just before we closed, there was another well-timed tweet that set off a rally. But when I bring that up, in those levels against light volume, there was no follow through. And I happened to cover a short just before that news came up, only because we hit that level. I wasn't looking to buy it, but light volume on the break. We tested the first level of resistance, and we did it that makes me support. I didn't mean resistance. We tested that level 1, 2, 3, 4 times before we took off. Now you just mentioned using volume and also levels of support and help control some of the risk. I'm just glad I did not foresee this. I'm not on the email text list. But I want to go back and give you a shout out because I did see that volume.
Yeah.
I didn't take it because it was under session VWAP,
Hmm.
but things happen when you don't, markets develop. We get fragmented information. And right now, and I'm going to go back to this, being in this volatility, in this out of nowhere moves, going back to measuring your risk, how much can you afford? If you took a short down here, you really don't get a chance to get out. I watched that. I
Yeah.
was straight up.
Oh yeah. I
It
mean,
was up
it was.
higher on my automated platform on CQG. I heard two sounds, and I knew I actually knew what it was, but
Yeah.
my stop was filled 5 S&P points worse than where put it.
Oh yeah. Yeah, there were absolutely some prices here that did not trade. This is a 1 minute candle in the S&P, and it looks like the Nasdaq. That is 138 points in the S&P. It is a 2% move in 1 minute, and there was follow through after that. Right, it spiked almost 4%. So this is not a light move that we're talking about here. And again, Coach Paul, you just said it. Your stop got filled 5 points later than what you were expecting. That's the environment that we're in right now. So if you're going to be trading bigger size, Coach Paul, I know you were likely trading the micros. If you're going to be trading bigger size, just understand that you're accepting the risk of slippage costing you, you know, 50% more than where you expect to get out, or more potentially, right? So again, there's extreme potential, but potential on both sides in these markets. One of my favorite things to do, and you guys know this, is to frame out that high volume candle on whatever time frame. It's either a 30 or a 3, and we get the how do you trade these markets? This is extremely difficult to trade. It's manipulated. Um, in my experience, I've been trading for 14 years. I've heard I don't know how many traders now say that the markets are manipulated, um, and it happens. There's at least 5 to 10 moves a year where people say collectively, like, "Oh, this is manipulated." It just is what it is. So there is a way to trade around it, is what I'm looking at. If you're going to operate in these markets, and for me, it's doing exactly this, right? Framing out the high volume, doing something repeatable, right? I don't get to choose when a headline is going to come out, but I do get to choose how I'm going to interact with the markets. And we look at the Braden, right? Like it's like, okay, it is a fact, right? Water is wet. Um, what do we do from there if we're going to interact with the markets, right? I don't even know that we can be surprised if we want to call it manipulation. It's a ton of money to be made from these markets. Uh,
Yeah, you
like,
know, yeah, they are manipulated. There are certain things that you can't beat. It's in every business. But you just said it. There's ways you're not going to be able to do it.
yeah,
If you were, you wouldn't be on this program and you wouldn't be at Topstep. Period. But
yeah,
there's people who are successful trading in, in their in their plan,
hmm,
and that's what your goal really needs to be. Um, I won't get too deeper into it. There are times where it looks manipulated. That's just the way it is. Size wins. Period.
absolutely. And that has
Every
always been the
time.
case. That's been the
It's
case before
always going to be the case.
before electronic trading, before any of this. Size moves the markets. The bigger pockets get to move things around. And us as the little fish, if we can identify that, that's where we swim in the middle, right? So here we go. This purple box here is the regular trading hour open. Actually, I'm going to go to the Russell because I did trade the Russell. All the equity markets did pretty much the same thing. So I'm just going to do it from the frame of the market that I took the trade in. You map out that 50%. This white line here is the 200 moving average on the 30-minute. And then I am going to mark out the session open. And okay, markets are manipulated, sure. That means there's opportunity for me. Somebody else is making money here, so that means there's opportunity for me too as well. When I came in looking at the Russell, I was originally looking to the short side in this market, and then we had to kind of look at it, right? Look at the entire puzzle piece here. I frame out the highest volume 30-minute candle where all of that interest came in after the news. Whoever, and this is the way I like to think about this, these are not just candles. There is an active participant in the market at these prices. And when they get to trade that much volume, they also probably get to defend their position as well. And that's why I frame this out, right? This is not just oh, this is a high, this is a low. There's somebody here who's sitting at their desk or their algo is trading for them that wants to defend those prices. And I want to make money with them. So when we get a pullback into the full session VWAP, this is where I kind of started to cut off the sell side, especially because volume in the Russell never left that opening range to the downside. And then said, hey, you know what? Maybe there's a potential to flip long here. Took this for a couple of scalps. We can see that 50% area, that 200 moving average, full session VWAP, all sort of held. But I'll be honest, I came in looking for a short bias, which if I traded it, had the potential to not be a winning day today. Again, you can't fight the waves, right? You can't fight the ocean. If the ocean is pushing you one way, you can't fight it. So get with it. And that's what it was today. If we started to sell and see some pressure below this full session VWAP, then different story. But we've seen this a bunch, right? Where the New York session opens up, price trades lower than the opening range, volume doesn't, and then we pop right back up. Really decent opportunities on both sides today, but to me, a little clearer to the upside just because there's that underlying bid in the market right now. Anything else you want to say, Coach Paul, on the equities here?
Yeah, one other thing that watch and becomes a really helpful tool is the fixed range volume profile. Let's go through it on the Russell from last night. Way down there. Yep. So
Go ahead, Coach. I'll put it back on. Just there you go.
we had that huge the Russell, the move was even I thought even more pronounced.
It was
I
up
mean it
4% or 6%. I think at the highs of that move. Yeah,
yeah.
6% at the highs.
Now using watch the path of this fixed range volume profile. It didn't accept the volume didn't accept these levels until after this move. But once it did, we kind of capped the move. We found value and rotated around it.
Yeah,
Still above the 200 moving average. But at this point, the daily, the, the range for the day was already, oh, here, I had it here, 159 points. The average true range is 79 coming into the day.
yep,
You know, you understand those when we have these big moves. We talk about it in front of PPIs and major number days. What is the chances going to continue higher?
yeah,
Understand that when you see these kind of moves, because you can make you don't, if you got destroyed today, getting turned around, this is one of the reasons it's already made its move. There are
yeah,
times where you can say, you know what, I'm not trading today.
yeah,
That is sometimes the best decision you can make. Um, so I in the bring up the Nasdaq, and it's even more pronounced.
that point of control never did get above that 200 moving average on the 30-minute. I know I'm looking at a 3-minute chart here, but
Yep.
very similar.
No, it did. Yeah. If you look at
A
the
lot of
half
rotation.
hour, it just so I think a biggest lesson you can get out of this, win, lose, or draw, is this is, and I'll use this term, a manipulated move.
Mm,
It was made purposely at that time to get the maximum amount of reaction. because it happened in the crude and it happened in the indices. I mean, that's pretty obvious.
Yeah.
What I want you to look, if you get anything out of this, is understand why I look at average true ranges, how they affect your decision making at this point with that kind of move. What are the chances? It was 990. I didn't believe it was 990 points range for the day at this point. Most of that came in a few minutes.
Yep. Yeah,
How
how much more are we actually expecting here, right? A lot of times, and I've done this as a trader. It's like, oh man, I missed the 900 point move. That means there got to be another 900 point move just for me. And the market's like, all the people who created this move are sitting there laughing at you, waiting for another 900 point move to go, while they're just taking profits in the middle. So again, when you see, I like that, Coach Paul. When you see these big ranges, and I think we said it during the opening call, that's probably the range for the day. And more often than not, we see it in a upper or lower 50% of the move after the fact, right? Here's that NASDAQ move cut in half. We spent the entire day above the 50% of that range. When I was on with Braden and Dolby earlier, I took a decent short in this range, but we were looking at a 280 target here, and here's why, right? This midpoint here, 280 was the pivot for the day in the NASDAQ, so that's what I was looking for, but I have to start to think position management as we get close, because that 50% area, I've just seen it so many times hold that I can't be looking for more unless the market's looking for more. We never closed a 3-minute candle below that 50% area, and we wicked it twice. So really interesting spot to look at. Again, this is not something that we're seeing for the first time. We've been doing At the Buzzer for 2 years, and how many times do we see the 50% area of a high volume candle hold? There's interest there for some reason. Can we place a stop loss on the Android phone? David, I do not have an Android, so I would assume yes, but can't give you that answer. I would assume so. All right. Anything else on the equities you want to talk about, Coach Paul?
Yeah, one other thing of interest is watch when that point of control met its high point. Every time before that on this chart, we trade to it, not through it. Through it until the 200 moving average, where we start wicking. And then when we close below the 200 and the point of control, it was over. I'm gonna watch. I really. It's sometimes to use that if it hasn't reached your target and you're waiting for it. I mean, what does that mean? Volume, point of control. Its volume is now balanced. The move, this extreme move, is now balanced. And when you're closing below that on a shorter time frame, be aware, because the auction has been accepted not only in price but in volume. That point of control is a great tool. Watch it, learn from it, add it to your toolbox.
David Lopez saying lost my account because of this 900 point swing. Gotta have a stop in there. Gotta have a stop in there, right?
It's a great lesson.
Yeah, it is. It is a great lesson, and maybe there was slippage. So a couple of things, right? In this environment, no one should be over leveraged. No one should be trading without a stop. And if you could do those two things, are you potentially still going to lose an account? Absolutely. But if you lose an account on this move alone, you're not managing risk, right? And that goes for anybody. And I'm saying that as somebody who's done it before. You get blindsided and you're like, oh, that move got me out. And it's just like, no, your risk management did, unfortunately. Or the lack of risk management. But it happens. You got to learn that lesson. Let's take a look at gold here. Mr. Smith, greetings from Europe, Slovakia. Thank you for your work. Thank you for joining us. Thank you all of you for everybody for joining us.
Yeah.
Thank you everybody for joining us. Let's take a look here at gold here on the daily. A line that we've been talking about and the potential test of it. We finally got it. Here's that major 3-day sell-off that we had in gold. We saw yesterday the 2 daily dojis and then the rejection off of 50% of this area. And we were saying the heavier this market looks, the more potential it has to test the 200 moving average. Today, gold had a huge range today. In gold, we got all the way down to 4,100 evens, stopped to the tick at 4,100. That 200 moving average on the daily was 41.75s. What are you seeing here on the daily?
Well, well, look at the wick from that 200 moving average. Massive wick. This was what we've been talking about. When's the last time we touched it? I think it was what, 7, 8 months ago, if not longer. I don't even think
The 200 moving average, last time we tested it was February 2024.
February 2024. And we had a nice bounce out of it. But most importantly, look what happened when we got under the 50-day moving average for the first time. The next target is the 200. We found it. This is not a recovery yet, but there was some short covering down at the 200 at that time when we hit it. If we look at the half hour,
Give me 1 second. We'll put this 200 moving
uh,
average on the chart. There you go. So last night we had some really nice selling
yep,
into it.
right
That's
off the bat.
Jeez, that's a nice move.
And it was the continuation of this liquidation we've been seeing.
Mm-hmm.
I mean, you frame it out and look at VWAP. After the second candle, it's ticking down.
Yeah.
So and we do not look at that. We did not, from the opening, we did not close above session VWAP. That right there, we see it's liquidation, it's trend. It's not flopping around a level. And it just kept picking up steam. And then at the lows, by the way, it's been hitting these third level of support and like 3 days in a row. It's a rare event. So in other words, it's complete liquidation on a higher level. But this time we hit the 200 on the daily. And look what happened, that we had 6 half hours worth of higher and higher selling volume. Frame that out. It's a J trade.
Yeah.
And at the 200 moving average, the third level of support was 41.96. The size of this candle, what was it, about $100?
This 30-minute candle here is 125 bucks. 125 bucks.
Now we have bring it down to the 3-minute. Let's see what kind of volume, or 5-minute, whichever you choose.
Here's a 3-minute. The highest volume didn't set the low, but we saw some continuation volume here. That highest volume candle, this one did, the first test of the 200 daily moving average did make the low of the day. We closed above that, and then we got some continuation. So, maybe you did take this long here and get stopped out. That happens. But eventually we get down to that 4,100 and turn around from there. The highest volume, and we saw it on the 30-minute, was actually the 30-minute candle prior to making the low. Again, they're not always going to be perfect. The markets don't just serve up your favorite dish every every time you sit at the table, unfortunately.
Well, here, another thing is gold is probably too expensive to trade with the volatility at
Right.
this point. On a half hour, bar at that time, the average true range is 46, almost $47 on my chart. That's $460 of range in a half an hour. I- It's probably, even trading micros
Yep.
on a one micro. You, if you're going to trade it, you can get, you understand, you can get stopped out in a blink of an eye. Is it
Yeah.
worth trading? I leave it up to you. To me, I'll go elsewhere.
Yeah.
But key point is we've reached that 200 moving average. We held it. It had a nice wick. Can we continue through? I don't think so right now. We'll probably go a little for it to really repair. We'd have to find balance at the lows. Um, but the selling did stop on that 200 daily moving average with a crescendo. Um, Interesting spot. Um, it's interesting that peace is breaking out, quote unquote. Peace talk is breaking out, and gold is rallying. I didn't learn that in my econ class, but is this a short-term bottom? Well, hitting the 200 on the daily
It's a
is
sign.
one. It's a sign.
Is
I
a
would
sign.
not expect this to turn and run, but it's met its target.
Yep, absolutely. Really nice bounce there from gold. A couple of questions here in the chat. Does it help with my mentals looking at blue and yellow candles? Uh, Fresh fade, maybe, maybe. I've been using these candle colors. These are my trading mentors candle colors, so I've been using them for 9 years now. I don't even really think about it. I have on Topstep X, they're this color, and then on the Quant Tower platform I trade on, they're white and gray. And then all of the volume indicators that I have on Quant Tower are blue and orange. Uh, I just think that I don't know that I can have a trading platform with red and green candles anymore. It just I haven't done it for so long that it just look I don't like the look of it. Honestly, don't love the color red, and that's really the only reason. And even though my VWAP is red. Uh, all right,
Well, there's
Damon,
only
I
five
got
major colors. You gotta,
r- yeah,
you
you got to pick
gotta
something, right?
choose.
Damon, if you can retype your question, I saw your question. It says, you are a break-even trader after going 6 years. Let me know exactly what you want us to answer, and I can definitely answer you from there. Man cave, I've been killed with every color. Yeah, right. Try to make them nicer. It's like pink and purple. And it's like, oh, these are nice. These are soft colors. It's like, damn, a 900 point candle in the NASDAQ. It doesn't matter what color it is. If you don't got to stop, it's stopping you out.
For old floor traders, blue was buy and red was sell. So
There
you
you go.
see a lot of blue and red. That's why I actually am trying to migrate to just gray, gray colors. One of the things is the mindset is trying to eliminate green is good, red is bad. I can't have red and set you off into a tilt trying to get green.
Okay. All right.
Some neutral colors, a line chart. It helps me every half an hour. I put up a line chart to see the trend without the verticality. Whatever works for you is, and I think it's important is to remain as objective as you can. If green sets you off that you have to be green, I really advise changing that scheme because your subconscious will tend to scramble. Like I'm red now, I can't be red. I have to be green instead of trading a process.
Absolutely. Trade your process. Trade your process. Damon, we see your question. I got you. We're going to answer it. Welcome to the show. I actually don't even know if I've seen you in the chat before, Damon. So welcome. Thanks for joining. Maybe you've joined and you just never chatted before, but we appreciate you all being here. Hit that thumbs up button if you haven't done so already. We're gonna go over crude oil and then we'll get to more questions here. Crude oil, the inverse of what we've been seeing in the equities, right? As the equities markets go, crude oil goes the opposite way, or is it vice versa? As crude oil goes, the equities are going to go the opposite. The selling that we saw, Damien, you've been watching. We appreciate you being here. We saw some selling early, right off the equity open. We did open oil above $100. Sorry, right on the Globex open. We opened oil above $100. We took a look back at that high in the London session, and London must have got the facts earlier than everybody else because they started selling it, and by the time we were coming in, and then the time that headline dropped about Iran, London was already in profit, and then we just kept going from there. We don't need to super break this one down. Of course, crude oil is the most headline-driven market that we have. Shout out to Hogue with his weekly kickoff levels. Hogue's on vacation, and that weekly kickoff low, 86.50, was pretty interesting there. Of course, we knifed through it by two full dollars in crude oil, but not too bad after a 14% move. This was almost an
$17 range today.
Yeah, $17 range, almost an intraday bear market in crude oil. Pretty wild to see there. Again, this candle may have given us another candle to anchor to, especially in crude oil, right? We talk about the October 10th candle. In the equities, was today's super relevant on the daily time frame? Probably not. But on a 30-minute chart for the next week or so, better believe this 7 a.m. Eastern time candle, I'm keeping this on my charts until it's no longer relevant. Same thing in crude oil. I'm keeping this 30-minute candle on my charts until it's no longer relevant. Of course, we see that headline come in. Very interesting that even if we go to a shorter time frame here in crude, 5 minutes before, we see a little spike of volume. A little tricky there.
Going back to the half hour,
Yep.
we've seen this play before. We stayed inside the opening half. We had a very large range. We tested on top of it. But
volume was way below it.
Way below it. And once we got under session VWAP, and session VWAP started ticking down.
This is the Coach Paul trade. I still need a name, chat. What are we going to call this?
It's once again. And what is it? To do that, you have to have selling that's staying. If you study the VWAP and how it's calculated, that's why it's so honest. You can't manipulate it.
Yeah.
It left the trail. And then the move.
Yep.
By the way, if I was up for that, I would have taken about 75 cents of that $17.
Right. And said, oh, wow, good move. 2-1.
2-1.
Got my 2-1.
Because this could never happen. This might not ever happen again.
Yeah.
Might not ever happen again. So if you're new to this game, you say, I want to get that move.
You got to be on the email list.
You got
to be on the email list.
And
I don't know how to get on it.
Invited. Well, I have. But anyway, it doesn't. It's beware of that. Seems to me this market it's over $100 in WTI U.S. crude. Now it's been above $100 in Brent crude.
Yes.
What is it, about $8 difference, $7 difference? But it seems to me every time we get around 100, the emails start going out.
Yep.
But
hey, Scott.
That's just my tinfoil hat, and I'll put it down.
Yeah. Pretty big range. Again, we could do the same thing here. We frame out that range. 50% of the area held as a resistance. We bounced around in it for a while. These are not small moves in crude oil at all. Again, last year, daily ATRs were $1.45, if not lower than that. We had 30-minute ATR at $2.25, $2.50. So extreme volatility in crude oil. It's actually not super thin on the order book like we've seen gold. I wonder why. Scotty B needs some liquidity on the books to execute these trades. So we're seeing pretty, relatively thick order books in crude oil. I would consider maybe still trading the micros if you're going to trade it, but yeah, still pretty good trading here. Anything else you want to say in crude, Coach Paul?
Well, one last thing. We were talking, if we go to the daily, we were talking how about this was looking like gold. Go to that daily and we'll see why.
Oh,
Yeah, it was due for this. On
yep.
this daily, it's still in the range,
Hmm.
but rejecting once again at this 100. It's we know what the value is now. Has it broken the uptrend? No, not yet.
Not yet. Not yet.
But
Not yet.
like there's the 20 moving average. Like
Yep.
I said, this looks very much like gold.
Very
Um,
much.
so keep that in mind.
All right, let's get to Damon's question so Damon can get to work. Damon, we appreciate you joining. We do answer questions here. And if you joined us before, you know how this works. We go through all the markets, we answer questions in the middle, but some of the most important questions we usually save for the end, because my job is social media and it's a lot easier to clip up an answer to a good question when I know exactly when the timestamp is. So we appreciate you all, Damon. I'm going to answer your question now. Let's see. I've been trading for 7 years, have been stuck in the break even to small profit zone for 2 years, and I want to succeed and take it as a career. Family and friends have started doubting me. Please help me get through this so I can get success. So, Damon, that is somewhat of a loaded question, but I get where you are. And if you're in a break even stage for the last 2 years, you're doing a lot better than a lot of people. I'll say that first and foremost. A lot of people never even get to a break even state and they're just consistently losing money. So you're at a point where you can stay afloat in the markets. Your goal now is to figure out how to gain some traction slowly. What you're saying is, reading the rest of your comments here, 1 to 2 bad days take away my scalping profits. So what I'm reading, and I don't know your trade strategy, you said you're scalping, so I'm going to just go with that assumption. You probably don't have an issue making money in the markets. You have an issue with losing money in the markets, and you're probably losing more than you measured. And what I've seen, and again, I don't know you specifically, but what I've seen with a lot of scalpers is the mindset that I don't have to manage risk because I have such a high win rate. Now, you can let me know whether or not that's the case for you. And every time I've seen a scalper say that, they end up blowing up and losing the money, right? Especially if you have a high win rate, you feel like, okay, there's not many times I'm going to be wrong in the market. And unfortunately, all you need is one time that you don't accept the risk that you're taking to take back all your profits. And you're saying 1 to 2 days. You could have a day in these markets that take back a year. You could have a day in these markets that take back a decade if you don't manage your risk properly. So if 1 to 2 bad trades are getting you, Damon, it's nothing that you're doing on the charts. You're literally not managing your risk. And if you can't do that, and if you can't accept that, then you're going to continue that struggle. So in order for you to stay above break even and start to gain some traction, you have to manage the downside in your trades, right? On every trade. And if you don't do that, 1 to 2 bad trades is always going to get you in that case. Trust me, as somebody who has done this before. I've been trading for a long time, everybody. Most of the issues that you've all gone through, I've gone through every single one of them, and you don't get over it. So managing the risk, even though the trade is valid, or just take the loss. Okay, hold on. Let's go back to the NASDAQ for a second. Somebody may have had a valid short off of VWAP here, right? Why do I have to manage risk? I'm right. oh, fuck, I don't have an account anymore. Is that worth it? For any given trade, is that worth it? It's not. Right? And now, oh man, people are doubting me, all this other stuff. First of all, in my experience, trading is a very personal thing, and you can share it with those that are close to you. But I'm not sure how much somebody who doesn't trade is going to understand trading because, and it's a valid reason. I'm going to say this because I've heard the concerns as well. Trading is gambling. It's very akin to gambling. Would you agree, Coach Paul? In certain
Well,
ways, if you're
the
not managing
difference,
risk?
well, that is it. The difference
Correct.
between gambling and speculation, as it was told
Yep.
years ago, is measurement. Measurement of what? Measurement of risk,
Hmm.
controlling the downside. Gambling is just trying to beat the odds blindly. So it's controlled.
Yep.
If you don't control it, yeah, it absolutely is gambling.
Yeah. Yeah. And I've heard that concern from people who don't even understand trading and they're looking at what you do and they're just like, oh, you're literally just gambling. But they're maybe not understanding the risk management side of it. So, Damon, what you're saying, so just cut the loss ASAP, that's not what I'm saying. Define the risk before you put on a trade. Coach Paul, Trading in the Zone, right? That's one of the rules in that book. Damon, if you've never read it, read Trading in the Zone. Define how much you're willing to lose before you place the trade, and that you might still be right. I got in. So somebody asked, great question today, and Coach Paul was just talking about trading gold, and maybe not even trading the gold micros. How did I get to my profits today? My profits today came from trading gold, trading the Russell and gold. I was trading the big gold contract and said, I want to take a scalp out of this trade. I'm defining how much I'm going to lose prior to putting the trade on. I am willing to risk $500 per trade trading gold right now. If it stops me out and I'm right, that's what I have to accept. If the stop was too tight, that's a decision that I decided to make, but I saw some trade location that presented some decent trade opportunities with that defined risk. Define the risk before you take the trade or don't take the trade, because you're always going to feel like I should be right, and the market could not give a shit if you're right or not. It actually wants you to be wrong. It actually wants you to think that you're right and keep putting more money into the system so it can take it. So if you can't accept being wrong and it sounds like you're a scalper, which in my experience, probably yours as well, Coach Paul, scalpers have a very hard time admitting that they're wrong, which to me doesn't make any sense. If you're right 80% of the time, just take that one loss. You're going to continue to be right to a high clip. Manage your risk, or you're going to stay in that cycle. And I don't want to see that happen. So decide what you're going to risk each trade before you take it. Don't change it. Anything else you want to add to that, Coach Paul?
Last one, and I know you got to get to work, Damon. You need to journal this.
Yep.
You need to spot. And you can ask that, but the data is in your trading. You journal it because you're going when you journal it, you're going to find these spikes of losses. When you can do that, you can come full truth to what the problem is.
Mm-hmm.
Because there will be a pattern like, what the hell happened here? And when you accept it and come back and go, oh, I didn't put a stop in, or I mean, and yes, there's numerous. But
Yep.
what I've found out, it's usually particular to your personality. But you will find it. If you're not journaling, you're not going to find it. You're going to avoid it.
Yeah.
So start margin. You'll get that answer because it will be on certain days where either you didn't put a stop in, or you added to a loser, or you refused to take the loss. That's why it's so important to put. I'm going to put it out there again. Put that DLL at 12% of your account balance.
Yep. Absolutely. Absolutely. Do not lose more than that 12%. And that should only happen on occasion. Um, Damon asked one more follow-up question. Can traders make serious money? Traders and good risk managers can't. Gamblers might make serious money, quote unquote serious, depends on what your definition of. But it doesn't matter how much money you make if you can't keep it. So I can make $1 million today. If I lose $1 million and one tomorrow because I can't accept a loss, who cares? I lost $1. So manage your risk. And, with day trading, and I will continue to say this, day trading is a lot of people say this, oh, I want this to be my career. I want to quit my job. I don't know that you should be looking at, I don't know if anyone should be looking at day trading as a retirement plan. MP has said this. The money that he made when he was trading on the floor, he took it and did something else with it. And I think that's where day trading fits for me and where it should fit for a lot of people. If you're able to make money from doing this, this is such a high performance sport that your thought process should be, I'm taking this money to go do something else with it. It's a really great opportunity, especially with the leverage product of trading futures, but it should not be what your retirement plan is. There should be a game plan for the money I'm taking out of here to do something else with it, to make this all, it's an ecosystem, right? It's not the end all be all. There's way too many loose variables in day trading for it to be that. So that's my opinion. And I'm somebody who day trades every day, but that is the way I look at it. All right. What Yaz said, why would you journal if patterns don't? I don't even understand that question.
Well, I can do.
Why would you journal when patterns don't always repeat? They do. Go ahead, Coach Paul.
Mr. Longshorts put a great answer to that.
Yeah.
Journaling is for self-awareness.
Yep.
It's a key part, to be aware of where you go wrong. Every professional athlete has at least one coach. And the greatest have great coaches. Because that self-awareness, like, you have to be able to take some kind of feedback or critique or criticism. It helps you stay anchored into the process. Even and when you're most vulnerable, and this is what it for me is when I was up the most. Because even then, I got it. I've figured this thing out, and you're very vulnerable at that point because then you start ignoring little losses.
Yep.
They're not there for other people. Or you start ignoring the details. When you are journaling and you can start seeing patterns.
Oh yeah.
That by the way, that your ego is going to ignore. Because what's our first, as humans, first thing we say, it's blame.
Oh yeah. Can't be me. I'm perfect.
It was the market.
Yeah. Oh, it was Trump. Why does he always have to tweet when I'm in a trade? It's like, well, that's his job. That's his job. What can you control in all of this? And even if you're not, even if you don't believe patterns play out in the markets, which I think they do, patterns in your behaviors play out all the time. And not until I started journaling did I realize that. You might see me on Topstep TV. I'm trading on fast markets all week this week. There are going to be times where if I'm in a trade, I'm my bad, Andre, if you're watching, but I might start talking over Andre. And that's just a habit that I've developed sitting at my desk trading alone, that if I get quiet when I'm in a trade, I'm probably doing something that I'm not supposed to be doing. So for me, making sure I stay in tune with what the markets are saying, I'm talking it all out in real time. I have video journals I could go back and show you guys from years ago where I'm like sitting here biting my nails, leaning into the screen in an over leveraged position, and then just actively losing money. And that was a pattern that showed up every time where I said, I'm going to talk through all my trades. When I stopped talking, I was doing something wrong. Would never have recognized that pattern if I didn't have the journals. So you might notice patterns in yourself. Coach Paul, any other markets you want to talk about? We talked about a bunch of them today. We got a bunch of volatility here in a couple places. Anything else
Yeah,
interesting to you?
let's look at the bond or 10-year.
I got to switch accounts. Give me 1 second.
Oh,
I
sorry.
don't have the data for it on my live account.
Yeah. All right. Let's go with the daily.
Here you go.
All right. Now, what cannot be ignored is this bond or interest rates. We we said there is a theme today about manipulation. You can manipulate markets in the short term with headlines, different, but this bond chart, you cannot manipulate long-term bonds. It's too big. There's too much at stake. This
Yep,
is not a healthy chart. Look at this. It looks like the S&P chart.
it does.
So one of the things not to we can't ignore this interest rate problem. You
Yeah,
know, you speak of manipulation. I know it. There's, they don't want it in the headlines. What has not gone away is this private credit problem,
mm,
and I think it's an anchor. I look at that bond chart. It is hardly bullish. I looked at a monthly or a weekly bond chart, and got even more. Well, you don't have the extended continuous chart, unfortunately, but the bond market's problems are still there, and it it's very heavy. Because why do I bring that up? When this kind of problem comes, 08, 2021, COVID, um, the Fed could step in. I don't think the Fed can step in now. Matter of fact, it's heavy. So that's not that hasn't gone away. Keep an eye on on the treasuries. Um, and they do not look healthy. Look at how is it manipulated in the short term. Everything's spinning on crude. Understand that this scenario is more than just crude.
yep.
Crude is leading the way.
There's a lot
It,
more under the surface.
there's so much under the surface. That's why $100 crude is being quote unquote manipulated.
Yeah,
So keep an eye on interest rates also, and that's it.
good stuff. Thank you for that, Coach Paul. I want to answer a question from Yaz. Another follow-up question from Yaz in the chat. So, how do you overcome manipulated price action when, as a futures trader, we're dealing with day trading? You don't.
Yep.
You manage your risk. You manage your risk. If you're trying to avoid this, the best way to avoid it, don't trade.
Yeah. Okay. And with that, I'm going to leave this for the night. You know how you do it? You plan your trade
Yeah,
and you trade your plan. You don't watch the headlines. Understand there's news events. You can't, there's regular news reports, but you're not going to avoid it. And if you can't avoid it, or you can't measure your risk and control your decision making, which is planning a trade, really at one point it becomes just don't trade.
yeah.
And I'm not saying that to be an asshole.
Nope, not at all.
And it is coach. It's really it comes down to that's why in this volatility, it's extremely important.
For sure.
Headlines, by the way, are used to manipulate. That that's
Yeah, that's the
that's
intent
why
behind them.
I don't make decisions based on news. I'm aware of when reports come out, but I, I did that
Yeah,
and I've been there. So the news headline itself is not the decision making process. Find an edge, whatever it is. J trade. If you can find J trade steady and just trade those, that's an edge. They don't always work, but there's an edge. It works over time. And then prove it. And then look for that specific trades.
Yep.
All right. And then that's
All right.
all I have
Now
for today.
I don't know where you're going with that. All right. Yeah, we had a good conversation. It's starting to devolve a little bit here. So we'll get out of here. Good stuff as always, Coach Paul. I think some people are suggesting calling it the Obi trade or the Paul drop. I like that, the Paul drop, like a ball drop, like New Year's Eve drop, but
Like a mic drop.
yeah, maybe we'll workshop that. I like that one. Yeah, if you want to trade under bad rules, be my guest. Trade well, everybody. Manage your risk. We got coaches doing classes in Discord after this. Coach Hoop at 6 p.m. Eastern time. Then we got Coach Ray and Coach Vince 7 p.m. and 8 p.m. Eastern. Coach Dakota, I believe, with Slow Markets tonight at 8 p.m. I should be joining him for that. Then we got Aaron with the London Open 2:30 a.m. Eastern time. D with Metal Market 6:30 Eastern. Then we'll be back for the opening call tomorrow. Again, I will be trading on Fast Markets tomorrow, so see you all for opening call and for Fast Markets. If you haven't done so already, hit that thumbs up button. We appreciate you all being here. News is just noise. Trade well, everybody. Manage your risk, and we will see you all soon. 8 p.m. Eastern time is Slow Markets. 8 p.m. Eastern time, 7 p.m. Central. Thanks, everybody. Bye.
Ciao.